Welcome everyone to SmallBiz Wiz, where business dreams take flight. Join me on the journey of entrepreneurial discovery as I unravel the secrets of small business success. From growth hacks and marketing mastery to financial wizardry and inspiring stories, my channel is your guide to navigating the world of small business like a true wizard. Get ready to conjure up innovation, cast spells of strategy, and enchant your way to prosperity. Subscribe now and become a small biz whiz yourself. So it is August 28th, 2023, and I'm going to talk about small business loans. Small business loans play a pivotal role in providing entrepreneurs with the necessary capital to start, grow, or sustain their ventures. These loans offer financial support for various needs, from launching a new product line to covering operational expenses during challenging times. So here are some key aspects of small business loans. Types of small business loans. So small business loans come in various forms to cater to different needs. Some common types include term loans, which are repaid over a specific period with interest, lines of credit, offering flexible access to funds, equipment loans, dedicated to purchasing machinery or equipment, and SBA, Small Business Administration loans, which are government-backed loans with favorable terms for qualifying businesses. Funding for growth. So small business loans are often sought to fund expansion initiatives. Whether a business is looking to open a new location, increase inventory, or invest in marketing campaigns, loans provide the capital needed to seize growth opportunities. Startup financing. New entrepreneurs often face challenges when it comes to securing funds for startup costs. Small business loans can provide the necessary initial investment to cover expenses such as product development, marketing, and operational setup. And then there's working capital support. Maintaining a healthy cash flow is vital for any business. Small business loans can bridge gaps in cash flow, ensuring that operational expenses, payroll, and other financial obligations are met even during slower revenue periods. Interest rates and terms. Interest rates and terms for small business loans vary based on factors such as lender, loan amount, creditworthiness, and the type of loan. Comparing options and understanding the associated costs is crucial before committing to any loan. Then there's the application and approval process. The application process for small business loans typically involves providing detailed financial information about the business, including revenue projections, credit history, and collateral. Lenders evaluate this information to assess the ability of the business to repay the loan. The approval process can vary in length from a few days to several weeks. Risk and reward. So while small business loans offer access to capital, it's essential to assess the potential risks. Borrowers need to consider their ability to repay the loan, taking into account factors like revenue projections, business stability, and potential challenges that could impact their ability to meet loan obligations. Building credit history. Successfully repaying a small business loan can contribute positively to a business's credit history, making it easier to secure financing in the future and potentially qualifying for better terms. So just to summarize, small business loans provide entrepreneurs with a means to secure the funding they need to achieve their business goals, whether it's for startup costs, expansion, or operational support. These loans offer the financial boost necessary to turn business aspirations into realities. However, borrowers should be careful to consider their needs, options, and repayment capabilities before committing to a loan. Let's talk about SBA loans. So an SBA, or Small Business Administration loan, is a type of loan offered by the U.S. Small Business Administration, a federal agency dedicated to supporting and assisting small businesses. SBA loans are designed to provide small business owners with access to affordable financing, often with more favorable terms than traditional loans. That can be especially beneficial for businesses that might not meet the most stringent requirements of conventional lending. One of the key features of SBA loans is that they're partially guaranteed by the SBA. So this guarantee minimizes the risk for lenders, making them more willing to extend credit to small businesses that might otherwise struggle to qualify. While the SBA does not directly lend money to the businesses, it actually acts as a guarantor. That means that they promise to repay a certain portion of the loan if the borrower defaults. So SBA loans come in various types, including 7A loans, CDC 504 loans, microloans, and disaster loans. The most common type is the 7A loan, which can be used for a wide range of business purposes, such as purchasing equipment, real estate, or inventory, as well as for working capital needs. CDC 504 loans are typically used for purchasing major fixed assets like real estate and equipment. Microloans are smaller loans provided by nonprofit organizations to help startups and small businesses with limited financing needs. And disaster loans are offered to businesses affected by natural disasters. The application process for an SBA loan involves working with an approved SBA lender. While SBA loans are known for their relatively lenient terms and lower interest rates compared to conventional loans, they still require a thorough application process. Business owners must provide financial statements, business plans, and demonstrate their ability to repay the loan. Overall, SBA loans are a valuable resource for small business owners looking to access capital to start, expand, or maintain their ventures. The SBA's involvement mitigates the risk for lenders, making it possible for businesses with limited credit history or collateral to secure the funding they need to thrive and contribute to the economy. So, a couple of benefits of SBA loans: favorable terms. SBA loans generally offer lower interest rates and longer repayment terms compared to traditional loans, which can ease the financial burden on small businesses. Also, they have lower down payments. So many SBA loans require lower down payments, freeing up more of the company's working capital for other operational needs. There's also flexible use of funds. SBA loans can be used for a variety of business purposes, including working capital, equipment purchase, real estate acquisition, refinancing existing debt, and even startup costs. Access to capital. SBA loans provide access to capital for small businesses that might otherwise struggle to secure financing due to limited credit history, lack of collateral, or other traditional lending barriers. And it builds credit history. Successfully repaying an SBA loan can help small businesses establish and build a positive credit history, improving their future borrowing prospects. And there's no prepayment penalties. Many SBA loans do not have prepayment penalties, allowing borrowers to repay their loans ahead of schedule without incurring additional fees. So as far as the SBA loan application process, you want to select an SBA approved lender. So business owners interested in obtaining an SBA loan need to find an SBA approved lender. These can include banks, credit unions, and some online lenders. Want to gather documentation. The application process typically requires providing detailed financial records, business plans, projections, and other documentation that demonstrate the business's ability to repay the loan. You're going to want to complete the application. The business owner works with the lender to complete the SBA loan application, which includes information about the business, its owners, and how the loan proceeds will be used. Then there's the lender evaluation. The lender evaluates the application and determines if the business qualifies for an SBA loan. The SBA's guarantee may make lenders more willing to extend credit to businesses that wouldn't meet their traditional lending criteria. And then there's the SBA review. So after the lender's evaluation, the application is submitted to the SBA for review. The SBA verifies that the business and the loan request meet its eligibility criteria. And then we move on to approval and disbursement. So once the SBA approves the loan, the funds are dispersed to the business. The business then repays the loan according to the terms agreed upon by the lender. As far as SBA loan eligibility, so while SBA loan eligibility criteria can vary depending on the specific loan program, some common factors considered include the business's size, type, industry, financial stability, credit history, and the purpose of the loan. SBA loans are a valuable resource for small businesses seeking affordable financing options to achieve their goals. By providing a safety net for lenders and offering attractive terms for borrowers, SBA loans contribute to the growth and success of small businesses, which are essential to the economy's vitality and diversity. So, good luck with that. I will definitely post some more information on SBA loans in the future. Thank you for watching SmallBiz Wiz today, August 28th, 2023, where your business dreams take flight. Subscribe now and become a SmallBiz Wiz yourself. Thanks, guys.